Hey, this is Sasha Evdokov, and thanks for joining me here for another episode on trading and investing. And today, what I want to do is share with you the top 10 stocks that pay some huge and killer dividends. So first, before we get into these stocks and taking a look at them, you might be wondering, what are dividends? Well, dividends are basically a sum of money paid periodically. Now, typically it's quarterly to its shareholders from its profits. What does this mean in a simple way, or in simple terms? It basically means that when you hold a company's stock, they pay you every 3 months for holding a share of that company. Now, not every company will pay dividends, so it's important you find dividend-paying stocks if this is what you're interested in. But in other words, it's like them sending you a check every 3 months for just owning a piece of their company. Now, you get paid based on the number of shares that you own. So, for example, if I had 1 share and the company paid $3 for every 1 share that you had, well, then you'd get $3. If you had 10 shares and you get paid $3 for every share that you owned, well, in that case, you'd get $30. So, in other words, the more shares that you have, the more money you get. And that's the baseline behind dividends. Now, a lot of investors love dividend stocks, and that is because you're able to put your money into something, let it sit, and completely forget about it. And that allows you to continuously get paid every few months, every 3 months, or quarterly, most of the time. Sometimes it's a little quicker, sometimes it's annually. It really depends on certain companies, but in general, it is quarterly, and you get paid this dividend. So if you take your $1,000, you put it in, you buy some shares of stocks, and then if they're a dividend-paying company, you'd receive a check, or in cash basis, some money for every share that you owned. Now, keep in mind that certain companies pay a higher dividend than other companies, but that also may mean that they are higher risk. It's not always the case. Sometimes companies do pay very good dividends relative to its sector, even if it's a good company. But in other cases, you can have companies that are paying huge dividends, or a high percentage on a per year basis, but the company is not really worth that much, or the dividend is not stable, or it could be taken away at any given time. So it's important when you're looking at dividend related companies or collecting dividends from dividend paying stock, that you're looking for stability, companies that have been around for a while, that the dividend has been paid out consistently time and time again. And are they raising their dividend with time, or are they lowering it with time? So that's one thing to keep in mind as you're looking for dividend stocks. And that's what I want to share with you today. Is I want to share with you some 10 fairly good dividend holding companies, at least at this time in 2017. Now, things of course may change. The company may be less stable in the future. The dividend may change, and so on and so forth. And you have to also remember that you're not only getting paid from the dividend, you're also looking for stock appreciation. So combining this together, dividend payouts with stock appreciation, is the ideal best of both worlds. So you can have a company that has huge dividends, but maybe their stock price is horrible and it's not appreciating. And that's one of the reasons why they may pay out a huge dividend, to compensate for that, or to attract some people into their company. So here in this example, what I want to do is show you a company where sometimes people get tricked into the dividend. And when you look at this here off of the dividend.com website, you can see that the share price for this company is $1.67, okay? And when you start looking at the dividend yield, as you scroll a little bit down, here, just right above, you can see the dividend yield is 26.35%. And you're basically getting paid out 44 cents annualized. Okay, so it's not that much, but you can see the growth over the last year has not much has happened to that dividend. Okay, and when you look at this company and you look back on it, let's say on a quarterly basis or even a monthly basis, this stock in 2007 was doing quite well, right? It opened up $30 a share, sold off a bit, then came back into that $36 a share. And now it's been heading lower, and this stock price is right around $1.67. So it's really a cheap company, and it hasn't really been that stable. So here's the other problem. If you go to the NASDAQ.com and you type in the symbol there, you can also start looking at their payout. And you can see recently you're getting 11 cents. And that's why if you go ahead and multiply that times 4, right, quarterly, you're getting 44 cents per year. So you get 11 cents, 11 cents, 11 cents, 11 cents. So if you look back what the dividend used to be, you can see that the dividend actually is depreciating, right? So you used to get 52 cents, okay? Then you went to 53 cents, a little bit higher, and then you went down to 45, 53, 56, and now 11. So sometimes you get suckered into these things based on a percentage or a dividend yield because it looks attractive on the dividend yield basis. But the reality is they're not really paying out that much and the dividend isn't growing. So when we start looking at these things, the first company that I want to mention as far as stable companies and good paying dividends that have a pretty good history, first one is AT&T, or stock symbol T. And you can see the dividend yield for this stock is 5.14%, dividend growth 32 years, and the payout 67.1. In other words, my main thing that I look at is right here, dividend yield 5.14%. If you're looking at the annualized, that's $1.96. That's per year. So if you go ahead and look at it, let's just continue scrolling down right here. You can see the share price, 38.15. So if I go and type in T, what you want to do is you also want to look for stock appreciation. That's the other thing, because even if you're getting a small dividend here and there, but the stock is depreciating, it's going to cost you much more in the long run because you're losing money from that depreciation effect. Now, if I go ahead and pull up the NASDAQ website and just look at this, you can see the history here since 2013. This stock has been paying out, you can see 45 cents, 45 cents, 46 cents, 47 cents, 48, 49 cents. And it's been fairly consistent, it's fairly stable. The main point here, what you're looking for is, do they have money on the balance sheet? Do they have enough cash to be able to pay those dividends out for a long period of time? And with AT&T, it's a huge company. It's been around for a while, and they do have the money. So in other words, that's one way to back check it. I'm not going to go through this for every stock, but it does give you an idea. The second one I want to mention is P&G, or PG as the ticker symbol. You have a dividend yield right here of 3.09%. Annual payout is 2.76. That is, again, annual, not quarterly. Okay, divide that by 4 if you want quarterly. And then, let's see, anything else on this site? Nope. If we go to the NASDAQ site and just take a look at the payout, again, you can look at 2013. It's about 60 cents, then 64, then 66, and 69 cents. So you can see the payout has been quite good. Okay, so that's P&G. The next one is GM. If I'm looking at General Motors, again, ticker symbol right there, GM. It's a slow moving company. It doesn't move around too much. So you have a 4.45 dividend yield, again, annual basis. And then here you have 1.52 on an annual payout. Okay, so if we look at GM, and I'll just go ahead and just change this ticker symbol right here at the very top. We go to General Motors, again, you're getting 38 cents or 30 cents back in 2015, 2014, but overall fairly stable, large company. Looking at the next stock, IBM, another huge one, right? Ticker symbol IBM. If you're looking at the dividend yield, your dividend yield is right around $3.90 or annualized $6. Pretty good when you look at that. But the stock price is a little bit higher, right? So if we take a look at IBM, it's $153 per share, right? So taking a look, $153 per share. Whereas if you look at T-Mobile, $38 per share. So you can get more shares of AT&T than you can of IBM. So again, things to think about. That's why people often look at the percentage or the dividend yield right there. So anyways, with IBM, $3.9%, $6 annual payout. And if you take a look here, IBM, the payout, this will give you an idea, $1.50 for every share that you have, right? If you want to take a calculator, again, you have 10 shares, multiply times $1.50, you get your number. If you have 100 shares, same thing, multiply times $1.50, that's the amount that they'll be paying you. Apple, is the next one I want to mention. Now, this is also another fairly good growth company. So that's why the dividend yield is not that great, right? So if you're looking at this dividend yield, just right here at the very top, this dividend yield appears to be only 1.73%, right? So the percentage doesn't seem that great. And the annualized payout's only 252, right? So when you really look at this, and I start looking at it at Apple, you can see right here, it's 63 cents, which is about half of what IBM was. Still kind of a tech company and so on, but it's half. And the reason they do that is because they know they can do that since people are looking at their stock for appreciation, right? So if you're looking at Apple, you know, you're probably also looking for it to appreciate. And that's what's been going on with this company. Whereas if you look at IBM, you know, the growth is a little more slumpy, right? I mean, it's still, since the 90s, there has been growing, but relatively recently, it hasn't been growing that much. It's in its mature stage. So that's why Apple can afford to go ahead and pay it out less, since you're looking for appreciation as well, right? Nobody's going to give you free money. So they go ahead and try to also save a little bit money by not paying out as much on the dividends if they can. And that's what Apple is able to do because it has a lot of other advantages to the company. Wells Fargo is another one, WFC. So here's a dividend yield of 2.87% or $1.52. If you look at Wells Fargo here on the payout, you can take a look and it's about 38 cents per share. Okay, and you can see again, these are all stable companies doing very well as far as dividends go. Coca-Cola, KO, 3.27. I believe Buffett invests in this one, $1.48. In fact, a handful of these, many of these, he's also an investor in, simply because he's into dividends. Okay, because when you have a lot of money, you can take a lot of that cash, put it into dividend-paying stocks, and then they return that money. So the more money that you have, the more you're making on a per-share basis. So here, $1.48. If you look at Coca-Cola, KO, you can go ahead, take a look, 37 cents right there for every share that you have. Okay, next one is Deere, or DE. And this one is $1.90 or 1.92% with an annual payout of 2.4. If you're looking at it to see the stability, again, you're really checking the cash flow to look at the balance sheet. But in reality, if the dividend has been fairly stable here recently, then it's going to be stable more than likely in the future. And if it's a big company as well. So 51 cents, 60 cents, that's what you're looking for. Looks pretty good. And stock price around $124. And you can see this one, dividend shot clock, this one actually is coming up because it's in 6 days, 3 hours. They also tell you the declare date, the ex-dividend date, the record date, the payout date, and so on and so forth on some of these stocks. Anyways, taking a look at Verizon, here is another one with a 5.09% dividend, or quarterly $2.31 dollars. So that one's also paying out quite well. And finally, the last one is Walmart. Walmart's a big, huge company. You have a dividend payout right here of 2.68 or $2.04 for every year. Okay, divide that by 4, and you get about 52 cents or so every quarter. So anyways, as you look at this, this one has about 48 days to go for the dividend clock, 3 hours, 2 minutes, 1 second, and so on. So yeah, so here was the payout amount. You can see about 51 cents on that dividend, and those are some of the popular dividend stocks. And keep in mind, you're really looking for appreciation as well, because there's no sense for getting a dividend on a stock right here that just keeps heading down, right? Because if you bought 10,000 shares around this region, and even though you're getting a dividend, the stock continues to head lower. Why would you want that? Makes no sense, because you're losing much more on the depreciation value of the stock than you are making on dividends. So it's important to choose both, evaluating the future growth of the company, as well as the dividend payout. Thanks for joining me in this week's video lesson. I hope you learned a lot about dividend stocks and just some of the ones that are popular that are a little more stable that you can go ahead and research and learn more about. These aren't recommendations to buy any of these stocks. It's just a starting point to get your feet wet and to move you in the right direction on where to research. Again, everybody's risk tolerance and goals are different. So do your own research, do your homework, and then choose an investment vehicle that's right for you. Now, if you're interested to learn a little bit more about investing or stock trading, visit my website at tradersfly.com, where you can see some of the books that I've written over the last few years, or get insight about some in-depth premium video courses that I have available on technical analysis to option trading. Now, if you'd like to join me on a live webinar class where you can ask me some questions and we go back and forth with a Q&A session, then by all means, get on my newsletter list by clicking this button right up here. Enter your name and email address when you get there, and you'll be sent those newsletters as new webinar sessions are released and scheduled. And that way you can sign up and register for them absolutely free. Thanks again for joining me. In the end, remember, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you next time.